Currently, there is a lot of market optimism for the digital coin, and Standard Chartered is one of them. And the bank says that the digital coin could reach $250,000 next year. I spoke with Bill Winters, CEO of Standard Chartered, in an exclusive interview and asked him what's driving the frenzy.
I've got to give my digital asset research team full credit for getting the trend right. When people were very down on Bitcoin, they were calling for 40,000, and as it got to 40,000, they were calling for 75, and when it got to 75, they're calling for 250. I'm not a forecaster of Bitcoin prices. I do think that there's a role in the world for a well-regulated, well-run cryptocurrency market. There's a much more interesting, from my perspective, role in the world for a digital assets marketplace. And the difference between the two, of course, is cryptocurrencies are not fiat currencies. They're not controlled by central bankers or issued by governments, and the value is a function of what people are prepared to pay for it, not what's the fundamental value of Bitcoin. Who knows? Even with gold, we can say what's the fundamental value of gold, and ultimately, at some point, it's going to end up on your ring or on your finger or on your ear in some markets. But Bitcoin is not going to end up hung around your neck anytime soon, I don't think. So I have no idea where the price of Bitcoin is going to go. I think there's a group of investors who think that cryptocurrencies have an interesting place in an investment portfolio. There's another group of speculators who like to speculate on anything that moves around a lot in price. That's okay as long as it's done in an appropriate way. And the infrastructure implosion that you mentioned, with FTX implosion, people going to jail, etc., are indications of market failures or regulation failures or legislation failures, bad behavior that don't detract from whatever the underlying value of a cryptocurrency is. I'm not too focused on that, to be honest. Importantly, the infrastructure to support cryptocurrencies is the same as the infrastructure to support the whole other range of, let's call it, much more obviously societally useful digital assets. I'm not saying that Bitcoin's not societally useful. It's quite controversial whether it is or not. I don't much care. And I think anybody that's buying or selling should have responsibilities to buy and sell responsibly, and we should have the mechanisms to make sure that they comply with the law. And to the extent that we're involved with any of those things, and we are with Bitcoin or with cryptocurrencies, part of the reason that people are flooding into our ventures around cryptocurrencies right now is because we're institutional, because our compliance is unquestioned. And criminals don't come to us because they're not going to get an account. But people who are using these things for the right reasons, they're coming to institutional players like us, and they're leaving the places that were a little bit Wild West. And that's the way markets evolve.